We are back, and we are ready for these bells. Mark, we wanted to zip through with everybody before we open to give
more than $4. Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go.
Today is Black Monday, the day that
U.S. stocks are tumbling for the second day. The Dow is already down 1,000 points after dropping almost.
On the coronavirus emergency, the virus is continuing to spread. Overnight, more than 600.
Hello and welcome to the episode of Psychology of Stock Market. How was the news? Scary, wasn't it? Headline screaming about the market crashes. Economic turmoil. Feels like the sky is falling. When the market takes a nosedive, the mainstream narrative often focuses on difficulties only. That feels like everything is going down and there is no light at the end of the tunnel, isn't it? You might even start to think, is this it? Is the global economy facing a genuine crisis? Yeah, it's true. We have certainly seen some significant market movement recently, haven't we? Take the impact of those US tariffs, for example. The S&P 500 saw a sharp decline of nearly 20%. Nasdaq plunged almost 25%. The Dow Jones Industrial Average also took a 20% hit. Looking at those numbers alongside those dramatic news clips, it's pretty hard to get optimistic for the future. But let's take a deep breath and step back for a moment. Is the world truly ending every time the market experiences a downturn? Let's have a look at the history books. Think back to 1929, the Great Depression, also known as Roaring Twenties. As we all know, that was arguably the most devastating market crash in the history, with market plummeting by staggering 90% in just 2 years from September 1929 to July 1932. Look at the chart here. This chart illustrated the Dow Jones Industrial Average during the lead up to and throughout the Great Depression. The Roaring Twenties were characterized by a business boom and market rise, culminating in a peak around September 1929. Subsequently, the market experienced a historical crash, initiating a prolonged and severe bear market. Can you imagine the news headline back then? They were filled with despair, predicting the end of the economic world. Yet, the market eventually recovered after a long, painful period. Fast forward to Black Monday in September 1987. Another remarkable crash, a sudden and sharp drop that sent shockwave through the financial world. Look at the chart here. This is 1987. It's looked pretty small compared to right here, but it wasn't small at 1987. The market dropped nearly 34% in just a year. What was the prevailing narrative in the media? Again, it was filled with uncertainty and fear of prolonged downturn. But guess what? Since Black Monday, the market has surged by incredible amount. We are talking about an increase of almost 2200%. Then we had the dot-com bubble burst in the early 2000s, the global financial crisis of 2008, the sudden pandemic crash of 2020, and now the recent market fall by tariff concern. Each of these events was accompanied by a wave of negative news, prediction of doom, and an anxiety about the future. Do you notice a pattern here? There is often common thread in the mainstream narrative during this time of market stress. The world is ending, nothing is great, and there is no tomorrow. So, what I'm doing in the face of uncertainty? Let's talk about my own portfolio. I'm not immune to this market sell off. Seeing rate in your investment account can be unsettling no matter who you are. But here is where my conviction lies. I firmly believe that the US market with its history of innovation and resilience, will recover over time. When will that recover happen? I don't know. Nobody does. But I believe that as time goes on, US will find a new tariff deal with China and Europe. Every country. Business will adapt and the market will gradually climb its way back. So, what I'm going to do in the face of uncertainty, my strategy is simple: stay consistent. I plan to continue buy into the market, especially when prices are down. I'm focusing on the companies I believe are long-term compounding machine. Business like Amazon, Alphabet, Visa, Mastercard, ASML, Uber, and Meta. These are companies with a strong fundamental innovation potential and ability to generate significant return over the long haul. Why this approach? Because I understand that a market downturn can present opportunity to buy quality assets at discounted prices. When the market eventually reach new high, holding into this strong company should allow my portfolio not only recover but potentially double in value over time. My investment philosophy might be different from others. I'm not chasing quick gain or the latest hype. I'm focused on building long-term wealth throughout the consistent investment in company with a proven track record and future growth potential. So as the market navigate this uncertain time, I'm going to stick to my plan and I'm going to continue investing my money doing what I believe the best for my financial future. What's the best approach for you? That's a question only you can answer. Carefully consider your own risk tolerance, financial situation, and investment goal. That's all for today. See you in the next one.